Hello everyone, my name is Michael Lamott. I am the founder of ChartYourTrade.com. Our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're going to do that in this video is by showing you what kinds of stocks to buy. One of the scans that I like to run is based on sector leaders. Now, I'm looking for stocks that are both a leader within its own sector as well as belonging to a sector that is currently leading the market higher. That's the purpose of the scan. It is an extremely tight scan, and we'll go through all the parameters of the scan in just a moment. Typically, maybe one or only two stocks pass this super tight scan, but when they do, that's going to be a flag for us that this is a stock that we've got to pay attention to, because the potential is just so much higher for stocks passing this particular scan than almost any of the other ones that we look at, because it is so tight of a scan. So let's go through some of the parameters and see what's passing right now. Okay, so as you can see, there are a lot of parameters to this particular scan. I'm going to leave them all up on the screen just so that way you have the ability to copy them and put them into your own scanner if you choose. We have all this built into our own scanner, Chart Your Trade MRI. You could just click a button and run it. But if you wanted to run this yourself, feel free to copy it over here. Or we also have a blog post called How to Scan for the Best of the Best Growth Stocks. And this is outlined there as well. So if you wanted to copy and paste and manipulate it yourself and enter it that way, that's probably an easier way than to transcribing it off of this video. So do it that way. Anyway, so let's go through what we have here. First, the company's sector rank is going to be in the top half or better of all other sectors. That means that its sector is outperforming 50% of the other sectors. That right there is eliminating a lot of stocks, but we want to focus on the best stocks within that particular sector. And so that's where all these other fundamental parameters come in. The earnings that we're looking for are the best of the best of the best. So we want the percentage change in the latest quarter's EPS versus the same quarter of the prior year to be at least 25% or more. So this is something that helps eliminate seasonality. So if a stock or a company does better this quarter versus last quarter, right? So Q4 versus Q3, there could be a little bit of seasonality in there, versus if you're looking at Q4 of this year versus Q4 of last year, that helps you really see growth. Next, we're looking at the percentage change in fiscal year EPS versus the prior year. You want that to be greater than 0. So again, we want to see growth. And same thing for a lot of these parameters. We want to make sure that we're seeing growth in earnings quarter over quarter, year over year. The annual percentage EPS growth rate for the last 3 years is 25% or greater. This is something else that's going to help us focus on only those top stocks that have the best of the best earnings, and we're not just going to have some stocks with okay earnings, but for the purposes of this, we're only interested in the best because it's those ones that have the incredible earnings and sales and are a sector leader that have a much higher probability of making those 100, 200, 500% runs or more in a very short period of time, a year even. So same thing with sales. Sales need to be accelerating quarter over quarter, 25% or greater, and same thing with the annual percentage change for sales as well. We're looking at stocks that trade at least $15 or higher. The reason for that is because institutions, major mutual funds, hedge funds, pensions, things of that sort, a lot of them have rules that dictate what kind of stocks they could buy and the price at which they're able to buy them. So the cutoff for many of them is $15. So if a stock is less than $15, they can't participate. We want to be in stocks that are $15 or greater, because then those pensions and mutual funds and everything else with billions of dollars at their disposal are going to be the ones that are buying these large positions over weeks and months, and we're basically riding their coattails as the price continues to move higher. All right, and that's really about it for this scanner. A lot of criteria. Take it, input it. Let me know if you have questions about anything specifically mentioned here. Again, it's definitely a lot, but as you'll see, it really helps focus in on just the best of the best in the market. So let's take a look and see what's passing right now. Okay, so what we're looking at right here is the Chart Your Trade MRI Scanner. And it runs 8 different scans, and it overlays the profile of an ideal growth stock. What's an ideal growth stock? It basically comes out of this book here, How to Make Money in Stocks by William O'Neill. And what he found were the properties of an ideal growth stock. So stocks with outstanding earnings and sales, something new about the stock, being a leader in its industry, having institutional sponsorship, all these things. And what the ideal growth stock screen does, it allows us to filter any one of these other scans by a certain percentage of what an ideal growth stock is. So nothing is going to pass 100%, but we will start to find stocks passing at 80% or 70%, or keep on lowering it down. You obviously have a larger list, but because this sector leader scan is so tight, I'm not going to include this ideal growth stock screen at all. So I'm just going to turn it down to 10%, and I'm going to run this sector leader scanner, and let's see what we get. We get one stock. And that one stock is Arista Networks. And when you see just one stock pass such a tight scan, it deserves to be on a special watch list, period. And we want to be paying attention to this, because even if it pulls back or pulls back sharply, it can rally again, especially in the kinds of market conditions that we're experiencing right now. And we want to be aware of these kinds of stocks that are making reversals and giving us other ways to get into them, because the run is just gigantic. Let's pull up the chart, and you can see right here that is an insane move for the year. Let's see, where is January? So right around here, right? So started the year at around $90 a share. Right now it's up to $240 a share. So that's just an incredible run. And there were multiple ways to get in if you didn't get in back here in January. If you're looking at a daily chart, and this is why looking at multiple time frames is so important, because if you're only focusing on one time frame, you're going to miss out on the nuances of other things. And so back here on a daily chart, there was an opportunity to first get in back in January when it was crossing back above this over here. Then it gapped up. You could have bought the high of the gap, and then kept your stop down here at the low of the gap. That obviously held. If you didn't get that, you could have drawn a descending trend line over here and bought that rally and kept your stop tight somewhere in the neighborhood of 117, 116, or if you want it to be a little bit more conservative, back here at around 115, then it consolidated for, what is that? That's a couple of weeks. Could have bought that breakout. Then it pulled back, tried to shake people out. Big shakeout in August, and then it exploded higher there. Just like so many ways to get in. Like you could have got in right over here, or even if you bought this breakout here and you if you kept your stop below support, like right around, I'd say, honestly I probably would have had a tight stop and I probably would have gotten shaken out there, but because it's such a strong leader, you keep this, something like this, on your radar, and then whenever it gives you another way to get in, you take a chance and go for it. And I'm not saying go all in like that. There's other videos that I have, there's other blog posts on Chart Your Trade that talk about different ways to position size. At most, I'm only risking 1% of my capital on any single trade. If you're trading in and out of a stock like this, you could even risk 0.5% and still do extremely well. This was a massive shakeout over here, but if you were nimble enough to get back in a day later after that shakeout, what, you're already up almost 40% or more. And so that's really the idea behind some of this. There's a lot of different ways to trade the market. What I just described is a pretty aggressive swing trading way to get in. But if you're somebody too that is more of a long-term player and you bought back here, then you're really just riding the 10-week line all the way up. And if it breaks below it, if you're somebody that waits until the close of the week to make your decision, then you probably got in back here in January or February. And if you're waiting for a close below the 10-week, maybe you're getting shaken out in July or beginning or end of July. And then maybe you're buying this breakout over here and it hasn't closed below the 10-week line since. So that's another way to play this. So it works on multiple time frames. The main point here is when stocks pass these super strict parameters, they've got to stay on our radar, because these are the kinds of stocks that are going to make these gigantic moves. And so, well, we know that they are. It's just a matter of how are we going to be in them and trade them for this kind of a move. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally answer you. Also, if you like the video, give it a little thumbs up. That really helps us out a lot. And also make sure that you subscribe to our channel so that way you get all of our updates. Thanks again for watching, and I'll see you again in the next video. Take care and have a great day.